We all hear about the AI boom, right? It's supposed to change everything, create trillions in value. But what if the money tells a completely different, way more dangerous story? Let's get into it. This is the AI profit paradox. Okay, let's just start with one number. This number is the whole reason we're even talking about this. 95%. And it begs a huge question about this whole AI revolution. 95% of what exactly? Yeah, you heard that right. According to research out of MIT, a massive 95% of all the money being poured into generative AI right now, it's generating zero profit. Let that sink in. Despite all the headlines, all the excitement, the vast majority of these AI ventures are just not making any money. So that leads us right to the core of this whole thing, the 95% profit problem. I mean, how can an industry with this much investment be so spectacularly unprofitable? To even begin to answer that, you have to understand the mind-boggling scale of the money we're talking about. You see, the story of the AI boom isn't just about cool new tech. It's really a story about money. And when you look at the numbers, you realize this isn't just some trend. It's an absolute gold rush. So, get this. According to the investment bank UBS, the total spending in the AI sector is on track to hit $370 billion just in 2025. That is a truly astronomical figure. I mean, it's bigger than the entire economy of a lot of countries. And hold on, because it doesn't stop there. For 2026, that number is expected to jump to $500 billion. So the spending isn't just high, it's speeding up at this incredible rate. But here's the kicker. Here's the most important part of this whole story. See, this isn't just spare change that these big tech companies found in their couch cushions. A huge, huge chunk of this investment is being financed by borrowing. These companies are taking on massive amounts of debt to chase their AI dreams, and that just raises the stakes sky high. And this chart right here really brings those abstract numbers down to earth. I mean, just look at the new debt these companies took on in 2025 alone. Microsoft added over $46 billion. Oracle, a jaw-dropping $90 billion. This is all debt that has to be paid back with interest, which, is only really possible if these AI bets actually start paying off. Okay, so that brings us to the central mystery here. We've got hundreds of billions of dollars in debt-fueled investment on one side, and on the other, millions and millions of us are using AI every single day. So where's the profit? It's the question we should all be asking, right? I use it, you probably use it, our coworkers definitely use it. It feels super useful. Well, the answer, according to that same MIT research, comes down to this concept they call the shadow AI economy. So what is the shadow AI economy? Well, it's basically what happens when a new technology gets used for a bunch of small individual things, making one person's job a little easier instead of fundamentally changing how an entire organization works from the ground up. Just think about how most of us actually use AI right now. It's for stuff like this, right? Drafting a quick email, summarizing a long article, maybe translating some text. These things are helpful, for sure. They give us a little personal productivity boost. But they aren't exactly revolutionizing entire industries, are they? And right there, that's the fundamental problem. Companies are getting these small, kind of hard-to-measure productivity gains for individuals, but they invested hundreds of billions expecting massive, industry-wide disruption and trillions in cost savings you can actually see on a spreadsheet. The return on investment, it's just not there, at least not yet. Okay, so you might be thinking, well, that sounds like a problem for tech investors, not me. But this huge gap between hype and reality has massive implications for the entire US economy. And why is that? Because right now, the stock market is basically being carried on the shoulders of AI hype. Some analysts have started joking that we should stop calling it the S&P 500. We should call it the S&P times 7. And that's because a tiny, tiny group of AI-focused tech giants are responsible for almost all of the stock market's growth lately. It's pretty stark when you see it like this. The magnificent 7 tech stocks are just blasting off to new heights, while the other 493 companies in the S&P 500 are basically flat. The entire market's performance is balanced on these few companies, and their value is tied directly to the promise of AI. So let's just step back for a second and recap. We have a revolutionary new technology, we have insane levels of hype, we have huge amounts of debt, pretty much no profits, and a stock market propped up by just a few giant companies. Does any of that sound familiar? Because it absolutely should.
So on the left, you've got today's Magnificent Seven, and on the right, the big dogs from the late 90s. The parallels here are kind of spooky. Back then, it was the promise of the internet fueling a very similar frenzy, cramming all this value and expectation into a handful of companies.
And just look at the timeline of how this played out. The first serious warnings about a dot-com bubble started coming out as early as 1997, but the market didn't care. It kept rallying for 3 more years before it finally peaked and then crashed, completely wiping out companies that had borrowed billions to chase that internet dream. So all of this brings us to the big final question. We've seen the evidence, the 95% profit problem, the mountains of debt, this crazy market concentration, and these eerie echoes of the past. So what does it all mean for us, right here, right now?
I mean, this is the question that's keeping investors and economists up at night. Is today the new 1997? Because if it is, that could mean we still have a few more years of big growth ahead before any kind of correction. But the risk of being wrong here is absolutely enormous.
And this really gets to the heart of the dilemma. If you get scared and pull out of the market now, you could miss out on 2 or 3 more years of incredible gains, just like the people who sold in 97 did. But if you stay in, you risk getting caught in a catastrophic crash if this whole thing turns out to be a bubble. So, in the end, that's the billion-dollar or maybe trillion-dollar question we're left with. Is this AI boom a truly revolutionary wave, like the internet eventually became, that just needs some time to figure out how to be profitable? Or is it a historic bubble fueled by cheap debt and pure hype that's about to burst? All the signs suggest we could be at a major turning point. And honestly, only time is going to tell which way it breaks.